So the idea that you should sell everything because of the debt downgrade is that early warning sign? That makes no sense whatsoever. If anything, it's got to be the opposite. You're being given an early warning to invest more, not more aggressively, but more of what you can save. That's the real hedge if you're worried about the government's creditworthiness, not to get out now. I've always favored gold as insurance against excessive government borrowing, and that has worked well as of late. And when Bitcoin became legitimate, I added that to the roster of what you'll need if nothing good happens with the debt. We have a president that seems to care more about Bitcoin than the stock market, so he's a beacon for buying the stuff.
You cannot have a country where the American people keep on electing immigration enforcement, and the courts tell the American people they're not allowed to have what they voted for. And that's where we are right now.
Hey guys, welcome to another episode of Scriptures from Wall Street. I'm your host, Carlos Cortez. Been doing this for a long time, 4 years now. If you don't mind, go ahead and rumble.com, click like and subscribe our channel at Scriptures in Wall Street. We want to help you, give you knowledge about what's going on from a truth standpoint. Look, I don't work for no crazy Wall Street firm, no corporate the corporate entity that has the public shareholders' interests rather than yours. I've done that. It's just disgusting work. And honestly, my whole platform is based on funding what you want to fund and not funding avenues or industries that you don't agree with. So if that's you, then you may be a good fit for us. All you got to do is visit us at cortezwm.com. Let's have a conversation and let's just see how we can reduce your risk, reduce your taxes, protect your principal, give you some income while you're retired, if you are retired, or if you're trying to retire, to develop and accumulate wealth so that you can retire safely under the radar of the CBDC-like system that we're in, under the Luciferian laws that have been imposed on us, and more importantly, having protections built inside of your portfolio so that you can retire. I've been doing this for over 20 years, licensed financial advisor. So everything on this podcast is not investment advice. Please do not take it as investment advice, but as education and information purposes only. I will be talking about charts. I will be talking about my ideas, my philosophies. And look, I'm not perfect. I could be wrong. However, everybody's situation is different. And if you haven't had a chance to learn about red, yellow, and green money, there should be a podcast on this link somewhere on the bottom of the description. Check that out. It's a good 10, 15 minutes. And when you call our office, all you're basically is doing is saying, hey, I want some yellow money, I want some green money, and I want out of red money. As a former stockbroker, you know that I've dealt with a lot of BS, I don't have time to get into it today, but financial advisors, which I am one, or I would say investment advisors, I would say, mainly play in red money. As a former stockbroker, we played in red money. This is the column, this is the area that they only recommend things that have risk. They don't recommend anything that has guaranteed principal protection. Their version of guarantee is buying a guaranteed bond, which is not guaranteed, by the way. Your principal is still at risk with, what do you know? Interest rates. And what has interest rates been happening right now? Ask grandma, see how her bonds are doing right now as interest rates go up and down. And as you know, when interest rates go down, those prices go up. But over the course of 2022 and 2023, the interest rates have skyrocketed, causing the bond prices to plummet. So very, very bad situation for grandma or anyone that has a lot of bonds. Those prices could get recalculated and not in a favorable way. However, interest rates are going back. They're going back down. So those prices will come back up. And if you lost money in the bond market, you may just want to sit tight because those bonds could go up. And here's the crazy part is that when the stock market crashes, they rush to the bonds. When interest rates go down, those bonds prices go up. This is why I like TMF as an ETF to hold. It hasn't been a sexy play, but I'm telling you, when this sucker hits, you guys are going to be having Christmas in July or late Late summer, I would say. Man, so we're going to look at TMF. Also want to look at shorting the market because everybody is like gone busters about why the stock market's coming back up. Bitcoin's going up. Gold's going up. Guys, this is when you start shorting. This is when you start thinking different. The media, the bro investors go to Yahoo and they get their information from Yahoo or CNN. And it's too late, big dog. It's too late. By the time you read it on the media, you missed it. The work is done before the media is hit. Period. Punto final, se acabó. Straight up. You got to do the work before it hits the media. That's how you win this game. This is how you basically figure out the manipulation before the pre-manipulation. And that's what I've done. That's why I've invested my whole career in this. This is why I'm on this platform. To speak the truth. I have no crazy sponsors. I don't get paid millions of dollars to promote one company over another. None of that. Every single company that I have that I promote is affiliate program, guys. I don't get paid anything. We're self-made here. I have no aim. To basically promote anyone else's company. I'm self-made, guys. I pay for my own podcast. I pay for this camera. I pay for all the advertisers or whatever I do. I pay out of my pocket in hopes that you give us a call and give us your business so that I can continue podcasting. I can continue speaking the truth. I can continue giving my point of view on what the markets are doing, calling it out, letting you know. You guys that researched me for 2 or 3, 4 years or followed me, you know my win rate. You know exactly what I'm saying has hit. I mean, the proof's in the pudding, guys. I mean, there's over 300 podcasts on this site. Just go all the way back 4 years from now and tell me what hasn't come into fruition. Fast forward it to now. Like, I'm that confident. It's not a thing of cockiness, or it's just I am confident that this is what's happening. And my charts basically confirm what we believe in. So the major thing is that we need to understand that we cannot invest with our emotions. Our emotions will screw you over, hand over fist, every single time. The whole market is based on psychological levels and media influences, and that includes social media as well. We didn't have social media 15, 20 years ago, and it wasn't really a risk. Like when I had studied for my Series 7, we studied about all the different types of risk. It was political risk, geopolitical risk, interest rate risk, banking risk, obviously market risk, volatility risk, all the risks that you can possibly think of. And media risk was out there, but not social media risk. So we have a social media risk that right now, obviously, if Elon Musk or Trump, even Andrew Tate posts something, it could shift the whole market. It is wild. It is wild, the frenzy that happens. And so we have a whole nother risk. So why, for those of you that have gold, we're going to take a good look at gold. We're going to look at SPXS. We're going to look at QQQs and a green money solution to save your retirement and take advantage of actually what is going on. So that's my aim for today, is creating a plan for a weird environment, creating a plan that you can be successful and show you some unique ideas you may not be doing on your own. Maybe your current advisor doesn't have the capability to do this, and that's okay too. It's not his or her fault, but they actually chose their career path. They chose their product lineup. And so if you dig deep into that, why would they choose to be handcuffed to one company or a company that represents several companies? Why did you choose that? Are they paying you something to say their version? Like, really, really consider that. Then you'll find what motivates them. Is it a paycheck? Do you know how many millions of dollars I've been offered to go work at the big banks, to bring my book? And then they tell me, hey, your podcast, you said cut off a penis and a woman. We can't say that here. I'm not interested. Well, guess what? I ain't changing my message, dog. I'm not the corporate guy. That's not me. I'm happy and content telling the truth like it is. Do you think I really need your few $1,000,000? You can shove it up your freaking ass. Straight up, man. It's freedom. It's freedom to say that. I'm not controlled by your offer. I'm not controlled by funding the stupid woke media, the stupid woke agenda that is detrimental to God's people, period. So yes, I will not conform to the dollar bill because that's what you're conforming to. I don't care who you are. I don't care who you are. My clients don't even care who you are. During COVID, we had all these big companies come into my office, face diapered up, vaccinated, and everything. After reading my sign, please do not have a facial covering in my office. If you are jabbed, you are not welcome. Like straight up, I said that. During COVID, post-COVID, yeah, I didn't want you if you're vaccinated. I don't want you coughing all over my beautiful air-freshened area with non-harmful chemicals in the air that I spent a lot of money on scent marketing. You remember all the crap that we got from businesses because we didn't have a stupid face diaper? Do you remember that? Do you remember that they would ask if you were vaccinated in order to order food? Like even go in the stores. Like, are you freaking kidding me? Like I was in Florida and I still witnessed that. They were doing that up north. Like I hated that, man. So I did the opposite. I said, hey, if you're vaccinated, do not come in this office. We have the right to refuse. So I just threw it back at them. And that's what we're doing today. That's what we're doing today. I've been doing this to be a disruptor, a godly disruptor. Is what I'm called to be, man. That's what King David was. That's what Abraham was. They were godly disruptors. Moses. I mean, that's the whole pinnacle of being a man, like masculinity, like base in that. I just don't get it. Like these days, man, like it's a crime. It's a crime. You should see that my driveway, guys. You guys know my personal story with the driveway. They legit did not want me to fill the moat in front of my home. And they were okay with the ugly eyesore of having a swamp in front of my house. And this neighborhood of mine, the Karen neighborhood I live in, golf course community, of course, they gave me hell, guys. I mean, just hell. I had to have the engineers. I had a lawyer up. I had to get a lawyer to basically redesign my front yard so that it can look aesthetically pleasing to the neighborhood. And I had a hard time with that up until now. And look, they're probably going to give me a hard time for the pebbles on the rocks on the fountain, but the pavers are down. The driveway is getting ripped up. Neighbors texting me, it's so loud. I can't believe you're doing it, blah, blah, blah. And they better not come on my property. I'm going to shoot them. Like it's nuts. Absolutely freaking nuts. I got a neighbor saying that he's going to shoot my contractors because he's making too much noise and he's coming across on his property line. And he's going to shoot him on self-defense to protect property and life. And I'm like, dude, you already sent me all the texts saying what you're going to do. I don't think I honestly don't think that's going to fly. So, anyways, that's what I'm dealing with, man. It's HOA. You got to love them. Any of you guys live in a neighborhood like that? You try to do good, try to buy a big house for your family that they can be proud to come home. And then you have like these neighbors that do not want to see you elevate, do not want you to be happy. Miserable people. It's always the crab theory, right? I've said about the crabs. You guys know the crab story. So grandpa takes granny boy, the grandson, on a boat. They go crabbing. And grandson asks grandpa, hey, grandpa, why isn't there a lid on your bucket? He says, son, because when the bucket is full of crabs and one tries to escape, the crab always brings it down. So I never have to have a lid because they pull each other down. And it's good parable. I mean, you can see the crabs in your life. Like anytime you do something nice, there's always someone negative, right? So the thing is that they got some other issues they're working on. So just say, God bless. I understand. God bless. Move on. They have to work on themselves. It's mindset, man. It shows up in the church. It shows up in your portfolio. It shows up in a marriage. It shows up in your business. It shows up with your social friends. It shows up everywhere. There's hidden traumas within yourselves that you've never worked on as a child. It makes up the fabric of who you are. And then your personality just exacerbates those hurts. So you really have to work on yourself these days, guys, especially the way we are, the younger generation. They're growing up victim. They're growing entitled. They don't have a means to, or a role model because their parents need work. They don't have a role model of what work is, what family is. It is insane to go to a restaurant with my family and people ask me, are all those your kids? Like they don't see a husband and wife and kids anymore. It is wild to me. It's how far we've come. We've come, guys, where traditional family is not even normal anymore. And it's hot outside. And I just got done playing with my kids outside in the heat. Full day of work. Doesn't matter. My son says, hey, can we play soccer outside? Dude, it's like 6 o'clock, 100 degrees outside here in Florida. I'm doing it. I just bought a little secret. Actually, hopefully they're not watching. They probably won't. But a little secret is I bought my in-laws a condo. I don't want to explain why, but they didn't have the means to buy a home. So I bought them a home. And behind that little condo is a golf course and a lot of grass. And so I had the opportunity to just tell Jacob, why don't we just kick the soccer ball around behind grandma and grandma's new place. And he said, okay, cool. So we're going to take the golf cart and just drive over there and we're going to have some fun, sweat, get dirty. And that's it. And so all the kids came, the wife came, terrible soccer player. You can see the video here. And it was just those moments, man, like we'll never get back. It's those moments that we live for. It's those moments why we seek knowledge. It's those moments why we work on ourselves so that we can enjoy those 5-10 minutes of running around. And it's so important, guys. It's so important to take care of your body. It's so important to lose weight, to stay active. I'm not the most in shape person, but I will wear out my kids. I will wear them out. I will outrun them. They have to keep up with me instead of me keeping up with them. I hate when people say, oh, yeah, they're going to wear you out. Well, you're the dad. You shouldn't have to be some fat ass guy sitting on a couch drinking beer and yelling. That's not a dad. That's a freaking wussy. So don't let that be you. And that will damn never be me. I promise you that. I may get slower, but I'll always be able to keep up. And I just don't agree. I don't agree that you have to live the normal life and say, hey, you're a dad. They're going to be faster. They're going to have more energy. But it's up to you to keep up with your body, to keep up with your fitness. Because at the end of the day, one day, some guy's going to come in and try to hurt your family. What are you going to do? You're going to be an asset or you're going to be a liability? And a lot of these fat dads right now, they're a freaking liability. I go to the hockey rink, dude, their freaking boobs are bigger than their wives. Like, and then you're yelling at your son to skate harder? Bro, eat the freaking hot dog harder. Like, what the hell are you doing? How can you yell at your kid when you're fat as hell? Like, how are you honoring God with your temple? It's disgusting. Anyways, don't get me started on that, man. Like it's bad. It's bad. So, men, we got to just shape up, man. We got to shape up in the church. We got to shape up in our homes. We got to be raw and real. Learn hand-to-hand combat. Pick up some dumbbells. Ask your friend to punch you in the face. Feel like what it is to get punched in the face. I'm dead serious, guys. Like, many of you haven't even been in a fight in years. Go get in the fight. Men are designed to fight. We are born to fight, literally in our DNA. You know, I went to a Hard to Kill event. My brother-in-law was like, hey, you go to a gun range? I said, no, going to gun range is gay. There's nothing that you can learn from a gun range. You actually pick up bad habits. And most people that go to gun range, they get killed in a gunfight. You know what's better than a gun range? Is actually getting shot at and then practicing your aim. And that's what tactical training is. And so if you don't know a tactical firearms basic training, I highly encourage, look one up locally. If you need one, I can help you find one. There's one called Hard to Kill with Rise Up Kings. I absolutely love it. You actually work on your aim while getting shot at with simulation rounds. That's how you learn. Everybody can change a magazine and, chamber it and actually shoot. But in the range, you're like doing a seesaw instead of drawing and pointing. Like, it's a lot faster when you draw and point like that than doing a seesaw. Like, hey, I'm going to the gun range. Boom, you already been shot. But if you're able to draw and pull up and square up your draw, you have a better chance of survival. Like, there's only 0.3 seconds in a gunfight. So, but you wouldn't know that unless you're intentional about learning how to protect your family. You wouldn't know that if you weren't willing to get in a fight. You have to be willing to get in a fight, to get punched in the face, to get shot at, to be a better, stronger man. Anyways, update on my son. For those of you guys know that he did not make this fall team, and it really was a hard thing. It was a blessing because now he's going to a hockey academy where the team is actually better than the one that he didn't make. And I'm talking to a lot of these kids, his practice yesterday, and these kids are driving literally 2.5 hours to practice so they can be on a travel team. Like, it's serious. They're driving 2.5 hours one way to go to a practice 3 times a week, plus travel tournaments. It's crazy, man, because they know that the colleges recruit out of these leagues, and you got to have the skills in order to make it. And another way to get skills is to play in the best divisions out there. So God bless you guys on that, man. It's tough. But my son, he's going to be playing with Nest Hockey Academy. I'm really, really grateful for that, for them. I shared that story last time, and I love. Thank you, Dr. Mason, for giving me that email. Thank you for all the emails from all of our listeners. Just a very heartwarming message of me just being vulnerable. Keep my son in your prayers, as his IEP is terrible. But having a full-time aide going in and basically translating the curriculum to his way that he can learn his language is just a blessing. And to get the development on the athletic side that he can't get at the team that he did not make is also a blessing. So it's amazing, right? It is so amazing. So yeah, man, there's so much I can talk about personally, but I know you guys want to learn about the markets, and we're going to get to the markets here after this commercial. So you want to lose weight, you've been on the peptide journey, but you haven't tried the best one out there. And these are natural-based peptides that actually work. Imagine being able to lose weight, control what you eat, portion control, hit your protein goals, and it really isn't that hard. You no longer have to worry about expensive monthly shots that you have to take, that you don't even know what's doing to your body. This is my before and after, and you can see how effective this is. Try it out for 30 days. You can cancel anytime. There's no gimmicks, made here in America and completely safe. No side effects. All you got to do is click the link below and let's get in shape. So let's watch a few of these videos. I got about like 4 or 5 minutes worth of videos I want to show you guys before I get into markets.
Well, I think that tariffs all along have been sort of a convenient distraction from the main issue. And, you know, I wrote a piece back when Trump first debuted his tariffs and the markets got all hysterical about it, called scapegoating. And, you know, the idea was that this whole tariff drama was going to steal headlines away from the main issue, which of course is our runaway fiscal situation, and specifically how we're going to be able to finance these deficits, which is why I continue to focus really intently on the 10-year Treasury yield.
Yeah, we have a lot of history to make between now and year end, but keep in mind that waterfall decline in stocks also was almost a complete reset in positioning and sentiment. You know, investors were forced to liquidate when the VIX hit 60. We know a lot of institutions didn't add risk back as the market rallied. So I think the pullbacks are going to be pretty shallow because investors just are underinvested at the moment. And then when you look at sentiment, it's barely turning neutral now. So if investors have been fighting this rally, as they become more neutral or more optimistic, that's upside for stocks.
I mean, Professor Jeremy Siegel, like you, has grown more bullish, pointing out, in his words, the Trump pivot on the tariffs, but he still acknowledges the fact that the tariffs are likely to remain in place. Whether it's 30 on China and 10 on everybody else, that's still somewhat regressive, is it not?
Yeah, well, I mean, you know, we are now in a new world of tariffs, and businesses are adjusting. I think one of the things that we're seeing is that the market is now in a position where they can start to look through some of the messy adjustments, right? We know there's been a disruption to the supply chain. I think stocks can look through that. But you're right, Scott, there is now this world where there's essentially a consumption tax in place on things that we're importing. But that doesn't mean we have to actually have the PE decline or the markets to fall. It's now just something we have to kind of manage through.
Okay, now I'm going to give you a view from Jeremy Grantham. This is the first television interview that he has ever done in his life. He has been interviewed on Bloomberg and others that are more not TV. Even if it's Bloomberg TV, it's not, you know, mainstream TV. So Consuelo Mack is a financial journalist, a reporter. She interviews him. She does a very good job. And gives him plenty of room to unpack what he has to say. But remember, Jeremy Grantham, he's in his 80s now, he is a macro strategist. So if you're looking at what's going to happen this month or this year, it may not apply because he's looking at decades of time and sees it from, you know, he goes back to the Depression, Great Depression, 73, 74, 79 to 81, 82, 2000 internet bubble, housing market crash, etc. He looks at all of those, and so when he's predicting whatever's going to come next, he looks at it from that kind of view. He is not a perma bear. He has had times where he has been optimistic about this is the time to get invested. So I respect him from the fact that he's not looking at just the negative, but at this point he is negative. And he talks about that there is risk in U.S. equities, that where we are on a price-earnings ratio right now and the multiple that is being used to develop valuations is extremely high, and that he sees a crash coming that is a 50% decline kind of crash. Again, he doesn't put a time frame on it, so I don't personally think it's right around the corner. But he makes the case for the fact that this has happened and it will happen again. He puts his own story in so you can see what he was doing during that period of time. Because he's a strategist, a thinker, he's interesting to listen to. So I hope you enjoy this. Take a listen to Consuelo Mack and Jeremy Grantham.
We were talking earlier that outside it's a pea super. You can't even see the next building. And that's a pretty good analogy with the market from my perspective. It's seldom easy to see what's coming. You only get a little kind of glimpse through what they used to call the fog of war. And now you don't even get that glimpse. All the old ratios don't seem to work for a variety of reasons, but you start with COVID. COVID rattled the world to its bones, and then the COVID stimulus was an order of magnitude bigger than anything we had ever seen. And it ended up with trillions of dollars in very weird hands. People who were bored and forced to be at home with nothing to do but speculate on stocks, and they did. And it stayed that way. So,
all right, guys, if anything I says resonates to you, do not hesitate to go to CortezWM.com, download a free guide, and just book an appointment with us. You can download a free guide at AmericaFirstRetirementPlan.com and fill out information. And if anything resonates with you, we want to help you. We're pretty good at what I do. And you may not get me depending on a time and a dollar amount vested, but you will get somebody, one of my trained advisors, my trained licensed professionals to help you. They think and talk just like I do because I personally trained them. And we want to make sure that you have an option so that you're not stuck. You're not literally stuck in the red money bucket where you have all the fees and all the risk and you're funding something that you don't even understand and you're aligning yourself with your own values. You actually get to talk to your advisor like a normal person and not have to say, hey, Mr. Bill or Miss Karen, what do you think if the dollar crashes? Well, if the dollar crashes, all we got to do is just go to bonds and don't worry about it. The banking system's not going to fail because you know why? I'm vaccinated. And Biden had a great program letting everybody know that, the psychology of the markets, blah, if we have a 60-40 model, like, even though I suck and I blah, 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 and I believe NASA's real and yep, the vaccine's real, your money's going to be great historically through my calculations. I mean, this is how they talk. It's like they're freaking robots. That's who you have as an advisor. If that's you, give me a freaking call, man. Like, I really want to help you. Do not conform to that BS. Like, they're just puppets. It's crazy. You got to get licensed to be a puppet. And then they have a carrot on you saying, hey, you can't say anything. You can't do anything. You can't talk about politics. You can't talk about anything because we have a reputation to handle. Oh, and by the way, your license is on the line if you go outside of our parameters that what we believe in as a corporation. Dude, screw that, man. Come on. Where's your freaking balls? Like, seriously, any advisor that works for these companies, like, where's your nuts, man? Like, where's your cojones? Do what's right for your client. That means go and start your own business, open up your own salon, and take the risk and give the best freaking haircut to your customer. Think about it. The best beauty salonists or the best barbers have their own shop. They're that good. And that's all I'm saying. Maybe you have a good guy at Edward Jones or UBS or Merrill Lynch. Maybe they say, oh, yeah, we're independent. We're Ameriprise. We're independent. Yeah, independent my ass. Give me a freaking break. So they pay you a little higher and they throw all the corporate roles on you. Give me a freaking break, dude. So whatever. All right. But yeah, we want to help you. It doesn't matter where you're at in the country. We want to help you. As long as you're okay with having a virtual relationship, as long as you're okay, your current advisor has a podcast and I just speak the truth. I'm just direct. I'm not here to cater to your feelings. I'm here to protect your money. Not a lot of people like that, but that means you're probably not a good fit and that's okay. So I want to talk about something really, really cool here that I'm excited about. Okay, so I have a little chuckle here. Look how funny this guy looks. He looks like a daggone cartoon character, right? Mike Johnson. GOP reveals bigger SALT, state and local tax break as pressure builds for tax votes. Pushing for a vote on President Trump's tax bill as the key Republicans dig in their heels. Holy smokes. So earnings, existing home sales all this week, what to watch. Yeah, we get that. Let's see what the bro investors are talking about. Bond jitters are back. Thanks to the looming U.S. debt time bomb. Oh my God, $36 trillion. Did you know that? Really, guys? Really? That's what a headline is? Bond jitters are back? Are you freaking kidding me? Interest rates have done what the past 2 years? What are we working on now at TMF? We're hoping that the interest rates go down. What jitters? Oh, you mean the bro investing jitters. The guys that are late to the game. Yeah, those jitters, yep. Disney suspends Venezuelan workers on Supreme Court ruling. AT&T buys Lumen's consumer fiber business. Walmart to cut 1,500 jobs to lower expenses. Wow, Snowflake jumps on Outlook. Why NVIDIA-backed CoreWeave's stock popped 19%. Trump stages another Oval Office ambush, lecturing Ramaphosa. I mean, this is what's out there, man. Like, it's basically is confusion. Like, you look at this, all right, 36 trillion jitters. There's no agreement on the SALT tax or the tax bill, Trump's tax bill. In a GOP proposal, the cap rates deduction to 40K. Really, all this stuff was just distractions on what's really going down. So Yahoo Finance is really not talking about anything. Let's go to money. Let's see what the woke media is saying, baby. Man, you know, when I was growing up, I have a confession. I didn't know anything. But I would go to cnnmoney.com to learn about, you know, what was going on in trending, because they told me as a stockbroker, I need to listen to CNN, listen to CNBC. Like, this is what they taught us. And the bro investors are real. We basically have to educate the bro investors on bro investing. Like, that's what a corporate financial advisor does. Wealthy foreigners able to register for Trump's $5 million gold card visa within a week. All right. So, hey, I mean, that's pretty cool. Like, hey, $5 million and you get a gold card. All right. Pay America. Cool. Dow sinks 800 points as bond market starts to freak out over a Trump tax bill. Oh my God. Stock bonds and the dollar fell on Wednesday as concerns mount about the premier status of American assets. Yes, we've been downgraded. We get that. Dow closed lower by 817 points, close to 2%. The broader S&P slid 1.6%. And a tech-heavy NASDAQ composite fell 1.41%. The three major indices each posted their worst day in 1 month. Stocks moved sharply lower and bonds sold off after 1 p.m. Eastern auction. 20-year Treasury notes was disappointing, according to Chip Hughey, a managing director of fixed income of Truist Woke Advisory Services. While the Treasury 20-year note usually garners less attention than the 20-year, I mean, 10-year or 30-year notes, all have been investors' perception of the Treasury since Moody's on Friday downgraded as the U.S. government. Man, we've been talking about TMF for how long, guys? Come on, man. Bro investing. If you hear somebody say, bro, did you read the article that CNN Money just had? The bond market's tanking. You might have a crappy investment. Don't listen to the bro investors. All right. So let's look at what really matters. And that's the charts, baby. Let's look at that 20-year Treasury, baby. There's a lot of confusion. If you're not listening to Scriptures in Wall Street, you're getting fresh, realistic, straight up analysis of everything. Because you know why? I'm not bought out. I legit am not bought out. And I love doing this. I do it for fun. And I said 4 years ago that I will be committed twice a week to be discussing what's happening in the market, regardless of what the media says. And that's why we're getting so popular. That's why we're on these networks. That's why we're getting the phone calls. Because we're shooting it straight, man. I'll tell you the good, bad, and ugly. It's all good. I'm here to let you know how to make money off of this BS that we're in right now. Let's go to the charts. All right, so this is TLT. This is 20-year Treasury, guys. Yes, it's coming down. I have a sell signal on my birthday, April 26th. Roughly, I'm sorry, Monday, April 14th. And it's been going down, and we got a sell signal. We get that. So that means those prices of bonds are coming down and yields are going up. Very, very interesting. Now we understand that rates haven't been coming down. They're going up. And so these prices are going down. There's an inverse relationship with rates and bond prices. So what do we know about anything stock related? We want it to go down so we can buy that bottom. So I hate to say this, TLT, the 20-year treasury, those prices are getting lower. I mean, you look at this. Look at this. This is on a daily. There's a 4-hour. There's a 4-hour chart. You tell me. Here's a 200-day moving average. There's a box here. Does this look like it's going up, down, or sideways? I have red traffic lights all throughout. Oscillators are pumping marvelously. This is a great short, by the way. Probably missed it on the short side. But yeah, this has a lot of momentum going down. Volatility index is creeping back up. We've got a lot of weird things happening, but the bond market the prices on those bonds are going down. So grandma, if you're listening to this, or anyone that's in fixed income, give me a call. There are some great solutions. You don't have to lose money in quote unquote Wall Street version of safe money, which is bonds, a 20-year treasury. It's losing value because those yields are going up. The interest rates are stagnant. They're not coming down as fast. When they do come down, this is going to pop up like crazy. So if TLT is down, that means TMF is dirt stinking cheap. So look, maybe you've lost money with TMF like I have. You know, I bought it over here. Dang, I bought this sucker way back here. I was happy here. I bought it around 50. October last year. And it's been going down ever since. All right. I thought interest rates were going to get lowered here, and it didn't. So I'm eating crow right now, but I will be doubling down personally once I start seeing this thing come back up. So I'm looking at TMF. This is 3 times TLT I just showed you. So the daily is nice. Now, this is going to be your safe place if you think the stock market is going to crash, because people will be running to treasuries like you wouldn't believe, in a demand for it's going to go up, which is going to automatically increase stock price. The VIX is going to go up. This is going to be a great investment. I'm telling you. It just takes about a year to formulate, and we're about 6 months in. I'm down like 40%. I'm okay with that, because hey, if this thing goes 100, we're looking at a massive 6-figure trade on a call option at 100. And I don't think it's going to stop at 100. This bad boy, if you guys remember, look at this sucker. I mean, I'm panning out. This thing was well over 400, my friends. So yeah, 100 is very conservative. Lower the interest rates. This will pop. People are scared of it's just a distraction with the tax bill and all that jazz. Okay, guys. So this is SPXS. And I kind of want to focus on this for a little bit. I know we're going to get short on time, but I want to focus on shorting the S&P 500. I really feel we're going to have a crash. I really feel. Now, what's happening is that this is going to be for someone that wants to make money during a crash. You want to look at SPXS. You want to look at UDOW. You want to look at TMF. SQQQ, which is a short NASDAQ. And obviously there's one for Bitcoin. BitU is a leverage for Bitcoin. And SBIT is the downside of Bitcoin. I don't know if I'll have time to talk about Bitcoin, but I promised you, Kevin, in Alaska, that I give a few minutes about SPXS. Thank you, by the way, Kevin. Good dude right there. Shout out to Kevin. So here's SPXS. This is 3 times the S&P 500. So if you feel that the S&P 500 is going to go up, you're going to buy the SPXL. You're going to buy the bullish side. So the opposite is going to be, and look, this is turning red. So keep that in mind. This is the S&P 500 3 times. We just had a death cross. It did drop, hit that moving average, and boom, it dropped. And now there's momentum going back up. But it's shaky, right? It's shaky. So we want to be very careful here. However, SPXS is the downside. It makes money when the S&P 500 goes down. This goes up. A lot of people like that. So it's a great hedge, not meant for all your money. You just don't put all your money into something like this because it's ultra risky. But if you're comfortable with the risk, you can put, 5%. There's nothing wrong with hedging in something that makes money when it goes down. You know what's crazy is that even if you put like 5% of your portfolio into this, when the stock market does collapse, you've lost everything in your portfolio. And this little 5% that you bought literally brings you back into what you lost. It is a great hedge. So I would only use it as a bearish fund, allocate to bearish funds, but you don't need to do all that when there's safe money, guys. Like we have green money solutions now. But I wanted to look at some call options because I like this setup here. The death cross coming. We had some momentum here. I'm almost getting green bars on my short term, midterm, and long term, right? So I'm going to be looking for a bullish sign here when this turns green, probably by this weekend, maybe next week, definitely by the summer, right? When that GDP number comes and it's negative, all this is going to be green. This is going to skyrocket. So right now we're trading, man, this thing is cheap, dude. Whoa, $5.64, cheaper than a Happy Meal. You can buy SPXS cheaper than a Happy Meal. And yeah, this is when you want to buy, when people are not talking about it. And obviously people are going gangbusters about the markets. You want to buy when people are happy. You want to sell. You want to sell when people are happy. And you want to buy when people are like depressed and defeated and catapulted. So emotional investing is a huge thing. So this is possibly coming back up. Once this turns green, this bearish power, this signal on the right is going to turn green. It's a bearish, and I might get a bear signal once this thing starts to hit closer to 200-day moving average. That volatility index will go to 25, 30. That's how you know the stock market goes down. When the stock market goes down, all this is going to turn green, and boom, we'll be able to buy into this. But I like it going down because it's getting cheaper and cheaper and cheaper. But for those of you that want to take the extra risk on SPXS, let's take a look at the options. Let's take a look at the options on this. All I'm doing is going to options calculator, nothing fancy. SPXS. And again, this is not investment advice. We're just looking at current prices and what it could do for information education purposes only. That's all. So it's at 563. We're going to buy a call option. Let's just say, holy smokes, look how cheap these things are. Let's go out. When do you guys think the market's going to crash? Definitely by the end of the year, right? So let's just say January 2026. Or, let's do the Octobers. July, I think, is too soon. That's going to be tough, man. That's where this, you want, the more time you have, the more expensive it is, right? So if it goes, and honestly, it's almost in the money at 563. Once it hits that $6 strike price, I like the October 17th. Let's try that one. A little less time, a little more because you're almost in the money. Let's just say you bought 50 contracts. That's $3,600. All right. And then stock price range. Well, let's kind of see what the ATR on that is real quick. So average trading range is 37 on a daily. 4 hour, 37 still. We can say that this thing recently on that sell-off was at the 823. Right? So going to $8 would be conservative, but if we can buy a call option at $6, we would make all of that upswing and some. If there is a crash within the next quarter. So let's go back to our calculator here. And let's just put a price range from 563 to $8.50. Let's just say. All right, let's see. We can calculate here. Sorry for these ads. They're annoying, but they got to get paid too, right? By selling their ad space to whatever, whoever. So if it hits $8, realistically, that's an $231 profit. It's $8,300 gain. If it goes to $850, that's $10,000, $10,500 on a $3,600 investment. So you'll have till October 17th for this thing to hit at least $6 or more. And if it hits just $6, well, you're not going to make a lot of money, but you make $1,000, and it's very close. So it's a pretty cheap option. But I really think that it could hit $8. Realistically, $8,300. Hopefully, it could hit the top left. Now, if this thing kicks off, then yeah, I mean, it would be a $10,000 trade on $3,600. You'll 4 times your money. So that's the call option on it. I like better ones out there. This weekend, I'll talk about some better plays, some shorter term plays that you can make some quick money on that I like if you're trying to build wealth with red money. But I like the SPXS here. I think a call option here at the $6 strike price would be huge. Hopefully it comes down a little more. It'll get cheaper. Yeah, we probably want to hold off on an SPXS trade because I think the market's going to come down a little more, and then you'll be able to buy those call options a lot cheaper if we can get a little bump to the downside. So I would hold off. I'll update you guys this weekend, but definitely give us a shout, give us a view on this weekend. Anyways, that's SPXS. We'll talk about QQQ this weekend, and also green money is how you build wealth with QQQs. If you're interested on that, we can protect your principal. We can guarantee your principal, by the way, the insurance carriers. And we love insurance contract law because you can grow with the markets. You actually can only ever lose to the money that you pulled out. There's no fees, there's no risk, and we can build wealth over time. So having that in your repertoire or your portfolio is going to give you a successful retirement in my 20 years experience because your principal is protected. And when we are bringing on a client, we simply ask them, how much do you want risk? How much do you want protected? Well, the protected account has a few rules to it. You can't access more than 10%. It is with an A-rated insurance carriers because you're buying insurance on your money. You're not buying this FDIC garbage that they track, trace, and control you. You don't even have access to it. You don't even have access to your 401k. You are a participant. When you put money in the bank, you've lost your money. You've lost the right to your money. The only thing that you have access to is withdrawing your money, but you legally do not own your money in the bank account. It is crazy. Read the disclosures that you sign when you open up a checking account. We got to get you out of that system and protect your principal and only make money on the growth of these indices that you are an account owner and is based on your life, and no one can take it away. And no, I'm not talking about life insurance. I'm talking about principal protected guarantee products that Wall Street does not have access to in red money banks. So if that's you, give us a call. We want to help you. 813-448-3446. I'm telling you, we want to double your assets within 4 to 6 years. And have the calculations work in your favor. You have volatility working in your favor because we don't lose anything. We only get the upside. AI is at the cusp of everything. We are going to a whole new revolution. The NASDAQ will eventually just skyrocket. But right now we have a massive bubble on the rise. And I just want you guys to be prepared for it. So give us a call. We want to help you. 813-448-3446. I will be doing a new segment answering questions. So if you have questions you want me to discuss, just email me at info@cortezwm.com. It should be on the screen here. info@cortezwm.com. Email me what you want me to talk about, a stock or any financial situation. If I can If I can shed light to it, I'll talk about it. But we're just going to take the top 10 and condense it and have its own segment. We'll spend 10, 15 minutes fielding questions of people that maybe they don't have time to call and set an appointment. We want to discuss it and use it because if you're asking a question, someone else has the same question. So it'll be beneficial if you guys have questions. I can read through it and I can actually talk about it rather than talking charts. So I hope you guys enjoyed this podcast. Don't forget to keep God first. Always, always, always say a prayer in the morning. Thank him for the first breath of your life when you wake up. And God bless you guys. Accept Jesus in your heart. He will make everything right. He will put your name in the book of life. And with that being said, guys, love y'all. I'm out of here. And don't forget to like and subscribe our Rumble channel so that we can keep on growing. And don't forget to go to Get Me Lean USA and get your natural peptides. God bless. Bye-bye.